For the concentrated liquidity providers, I'll go over the trading view indicator that I wrote about something I learned called the geometric mean. Using my link brings up the indicator overview showing some ranges plotted on a Bitcoin chart as an example. Scrolling down reveals the brief description, including the geometric mean formula, which is the square root of the min range times the max range. And scrolling a bit further down, we can add the indicator to our favorites by clicking the blue button. If you're curious, you can check out the code or leave comments. I like using the geometric mean to basically eliminate or nearly eliminate impermanent loss during rebalances and if the price returns back to where my position started. Oftentimes, if we are out of range, I have rebalanced to the new price, which books the impermanent loss. And if the price returned back to where my initial position started, I've oftentimes am left with less value in the position. So geometric mean is a way to nearly eliminate that impermanent loss and continue to earn fees while out of the initial range set. So going over to a chart in TradingView, I have the Ethereum USDC chart pulled up, and we can add it by clicking on the indicators at the top, making sure we're on the favorites tab, and clicking on geometric mean. We notice it was added to the chart with the default values. I can change these values by hovering over the indicator and clicking into the settings. And we have a few inputs we can change. The first one is the method, which I can choose between GM or range. If I choose range, I can set a specific min and max range that I may have already set in a current concentrated liquidity position. And the code will automatically calculate the GM based off the min and max. If I choose GM, then I can set a specific geometric mean, and the code will calculate the ranges based off this geometric mean. I use this when I'm starting a new position, and I'll set the geometric mean to the current price. We also have adjust from and adjustment percent, which allows us to choose the percentage we want to move from the previous upper or lower range on new ranges. On the first range, it just adjusts the percentage based off of the geometric mean. And then we also have a number of ranges that we can plot on the chart, which I'll just set to 1 for now. So if I'm starting a new position in Ethereum USDC, and the current price is 3,251, I can set that as the GM. 3,272. Oh, that's where my 3,249.72. And then this will populate the GM, which is the white line, and the range that we've set based off this adjustment percent. This is saying that it's calculating the upper range, 3,412, by going up 5% from the geometric mean. And then the code calculates the bottom range by using the geometric mean formula. We can change how far we want to set this upper range by changing the adjustment percent. So if we wanted a wider range, we could say 10. And that's saying the upper range is 10% higher than the geometric mean, and then we're calculating the bottom range. We can also go lower, which I like to set when I'm first starting a position, maybe a tighter, more narrow range, which in this case I'm going 3% from the geometric mean up. And it's given us a range of 31.55 to 33.47. So I'm going to pretend to add a new position in aperture to show how the ticks make a slight difference as well. So 31.55 to 33.47. We'll create a new position here, some wrap ether and USDC. Pick a feet here, and I already forgot. 31.55. And then we'll notice that it finds the price or the tick closest to the number that we inputted, which is 31.46. So it's not going to be exact. And the top range is 33.47. Which gave us 33.40. So what I like to do is, after creating this position, I like to take this the range that I actually have and change the method to range so I can get a more precise geometric mean. So I'll enter that as the min, and I'll enter this 33.40 as the max. And as you notice, the white line changed, and that gives us a geometric mean of 3,242, as opposed to the 3,249 that we had set when the price was set there. But this is a bit more accurate geometric mean to the ranges we actually have set, so I like to set it that way. We don't really need that set now. And let's say now we have this range set. Again, if the price happened to go above, out of range, say above, and we want to continue to earn fees, but we think that the price might come back down into this green range or back down to this geometric mean, then we can add another range on the indicator. And now this is setting this range 3% above the previous upper, and then the lower is calculated from the formula. Now that I have the min and max set, this percentage only will apply to the yellow range since the green range is hard-coded. So we can adjust this to however wide we want it to go. And this applies to if the price went above our range or below our range, we can apply the same yellow range wherever we like. We can pretend that maybe we had this green range when the price was on this red candlestick and the price went below. So we maybe set a yellow range at 8% when the price went below our green range and we went out of range here. Maybe we set a pretty wide yellow range and then we collected all of the fees on all of these cells, all of this cell volume down here, collected all these fees, collected all these fees, and then the price started to reverse And when the price returned back into our green range, we would do another rebalance back to our green range. And as the price went back to our geometric mean, let's say we started the position with $1,000, it would still be $1,000 or very close to it when the price returned back to this geometric mean. So that's the benefit. I've been scared to rebalance if the price went below my range to book any type of impermanent loss. But by doing it this way and setting a wider range, you are you have the confidence to rebalance and keep the same value. And while doing so, you're collecting fees the whole time. Now, setting a wider range obviously returns a lower APR, but again, you're collecting fees the whole time. And in this instance, so say we set the yellow range because the price went below and the price went down, and now we started to see it return. If we're okay with doing some more rebalances, we don't have to necessarily wait for the price to get back into our green range before we apply another rebalance. We could, let me lower this, say the price started going back up, and we noticed the price started going back up. We could have made maybe here a rebalance from the previous yellow range that we just had to this new yellow range and started earning a higher APR than that previous range while we're waiting for it to get back into our green range, and then we could do another rebalance. So we can set any range in between the current range and the previous range that we want. So I think that more or less explains the tool and how to use it. I may make another video explaining the geometric mean in more detail, but I just wanted to get something out quick to explain how to use the tool.